Good afternoon. This is 21st of April 2025, and we had one of the worst Mondays of the year in terms of stock market performance. S&P, the Dow Jones, Nasdaq, NYSE, Russell 2000, everything is down 3% or around that. We had a little bit of recovery around the market close. However, it was one of the worst performing days of the year 2025. The only thing that has been decisively up is the volatility index, up about 14%. It reached a peak of 35.75, but around the market close, it dropped slightly to 33. It's likely to head higher if the market continues to drop and uncertainty keeps looming. As we can see, the situation was not the same for the rest of the world. The other world indices were doing okay. They were steady. Some of them have risen slightly. We have the Kospi that has risen about 0.2%. The Mexican index rose 0.96. And we also have the Nifty 1.15, and everything. The global markets have been rising slightly. This is clear indication that there is capital that has been leaving the United States and finding itself into the emerging markets. Previously, President Trump has expressed that it's not only monetary tariffs, but there are non-monetary tariffs that are in place by other countries that is preventing U.S. from competing on a fair level, and that perhaps fuels Mr. Trump's reluctancy to backpedal on the tariffs that are currently in place.
We can take a sell a car. It's not a money thing. They make it so difficult. The standards and the tests. They drop a bowling ball on the top of your car from 20 feet up in the air, and if there's a little dent, they say, "No, I'm sorry, your car doesn't qualify." When the same car from Germany or anything would dent likewise, unless you can have an army tank.
And the reason why President Trump is so reluctant to backpedal on the tariffs is because he is truly convinced that the United States has an unfair disadvantage on global markets. And the same way that the foreign markets can access the American markets and consumers, Americans are not able to access foreign markets the same way. And he's very convinced on that. And it doesn't seem that that is going to change anytime soon. Now, we can listen to a response to that by Mr. Victor Gao, who is a businessman and a lawyer, and seems to be quite a bit of ambassador for the geopolitics of China in this current matter.
Each other as one of the most consequential bilateral relationships in the world. For years, their interconnectedness has allowed both countries to prosper, but recent developments suggest that period is over. Victor, let me start with you. Do you think that recent actions by the Trump administration has revealed what America maybe hasn't admitted for a long time, that it is really concerned by China's rise and perhaps considers it a threat to its global dominance?
Thank you very much for having me. First of all, China's rise is inevitable. No one can stop it. The United States cannot stop it. That's the mega trend. Secondly, this trade war launched by President Trump and his government against the whole world, including China, is the wrong war. And it's not constructive. It throws all the rules of the game out of the window. It damages the free trade. And while different countries need to come up with strategies, how do they want to deal with the United States in this manhandling of mankind, China has decided to rise up to the occasion and strongly defend the free trade. China will fight to the end, as the government has declared, and China has now imposed the retaliatory tariff up to 125% against all U.S. exports to China. Now, if
it seems that basically the narrative that free trade was always associated with the United States is now changing. It's China being the new representative of the free world with free trade and free markets, which is quite ironic given that America was considered to be the most capitalistic nation, and China is still a communist regime. But the practice of capitalism and free market is now shifting towards China. At least that's what the Chinese argument is on this matter. So when it comes to China, they are not only taking retaliatory measures against the United States, they are also taking countermeasures against any nation that tries to make unilateral business deals with the United States and trying to cut out China in the process. China wants to continue having their influence in the economic world as the largest manufacturer. It is not in their interest to have any country try to basically take a unilateral relationship and cut them out. And it becomes very difficult for countries to deal with this type of diplomatic situation where they have to balance themselves between the eagle and the dragon. One such example is that of Japan. 20% of Japan's profitability comes from the United States, 15% comes from China. And if they find themselves losing one partner or the other, well, that is enough to trigger a recession. Japan has previously been in a negative interest territory. It took them a lot of effort to come out of it, and their stock market has recovered after decades. And something like this would put them back in that situation for a very long time. And just like Japan, other countries are also finding themselves in a very difficult position, not knowing how to proceed in this tariff war. You can see also that one of the reasons why the market is, especially the Nasdaq, is taking such a big dive is because NVIDIA has been charged $5.5 billion. AMD has been charged $800 million. Basically, all AI chips have new restrictions that are imposed on them, aside from those that were already previously imposed by Biden. And this is creating new charges on the large tech companies. This also triggered basically the downward trend that we've been seeing since last week. So Dow today, as of Monday, 21st of April, it's down 1,100 points, approximately 3%. And as stated previously, we are witnessing capital leaving the United States to find itself into the emerging markets. One of the reasons why China can take such a hard stance against the United States is because they no longer depend on the United States like they used to even a couple of years ago. Now, their largest trading partner right now is the Association of Southeast Asian Nations, which comprises 10 Southeast Asian countries, making up almost $1 trillion in value of traded goods. You have at second place European Union with 785, South Korea above 300, and Japan also above $300 billion that is traded in goods. United States is still the single most largest trading partner, above $600 billion traded annually. However, as you can see, if you sum up the total of the traded value nominal dollars, they no longer represent the weight that they once carried on China. Now, what can we expect? Well, it doesn't look like the tariffs are going to be ending anytime soon. There's a hard stance from United States that has been made clear across the globe, and China is also not folding. So there's going to be internal measures, monetary policies that are going to be coming into effect to stimulate the economy. Primarily, President Trump's target is to lower the interest rate, and although he doesn't have directly the power to do so, he is putting pressure on the Federal Reserve Chair, Jerome Powell, to lower the interest rate. Mr. Powell did not basically go forward with the decision of lowering any interest rate because the concern for inflation is still looming for the United States. And however, basically, President Trump may find a way to get him fired or removed from his position and put someone in charge who will be able to lower the interest rates to stimulate the economy. However, will that necessarily bring back the golden age of the bull run that we witnessed previously. That is highly doubtful. So to bypass the chip, basically the restriction on the chips for on China's side, there's Huawei who's going to be shipping AI chips to China. We also have Bank of Japan, which is going to continue to increase their interest rate despite basically the tariffs. So we're seeing some sort of resilience developing across the world during this difficult time. So what we need to also take into consideration is the fact that nothing's conclusive. We have seen, for example, on the 9th of April, around the midday, the market suddenly rally almost 10%, actually more than 10% from lows of 415. I'm talking about the triple QETF all the way to 465. We're talking about 10% rally. We saw the similar numbers for S&P. So anything and everything is still on the table. It's possible that at a sudden point it starts having a bull run. We also have to remember that next week we are going to be heading into the big weeks of earnings from major tech corporations. We're talking about Google and Intel releasing earnings in 3 days. Next week we have Meta, Microsoft, and Apple who are reporting, and they do carry also Amazon, and they do carry the power to swing the market and in either direction. However, we need to remember that even if they post really good numbers, their guidance is going to be what will take all the focus. So, and if we don't have any basically policies that are coming to place from Washington that eases the trading, the international trading barriers that are currently in place, then we're going to probably getting pessimistic numbers on guidance. And pessimistic numbers on guidance, regardless how good the company is doing today, it is going to drop them across the board. And because these tech companies now share a strong correlation due to AI, if one company reports, basically the first company to report, for example, over here, Meta on the 30th of April, if Meta posts bad numbers, it will likely to create a contagion effect and also drop the entire NASDAQ along with Amazon, Apple, and basically move everything downwards in tandem. A positive guidance is very unlikely, but if it does occur, it will show resilience and numbers are likely to stagnate. A return of a bull run is probably going to be a dead cat bounce, meaning it's not really going to be based on fundamentals or any sort of real volume. It could be a temporary jump that will be followed by another drop. So we have to exercise a lot of caution in the market currently. We will see days that are going to be very positive and very negative, but unless we have conclusive data or conclusive news from the president and conclusive policies that show us and indicate to us that there's a strong reason to invest in the market, it's better to exercise caution at all times. We also have to remember that the market is likely detached from the economy at times. The market lags. It can lag for 6 months. It can lag for a year. So we just need to remember that we need to keep into mind that the market will not reflect the economy. The economy could be going bad and the market could still resist or even have a bull run, and vice versa. But we should not fall into the trap of thinking that they are moving in tandem, and that a sign of a good, positive, healthy market means that the economy is doing really good. That is no longer the situation, and we have to be cautious about that. Next week, we do also have economic data that will come out. So advanced GDP quarter over quarter. We're going to have unemployment claims and a lot of numbers. So the market will become extremely volatile for the last week the last week of April and the first week of May. So stay tuned and be cautious. And thank you for watching.